So a little bit about my background. I graduated with a business undergraduate degree from Penn, and I have an MBA from Yale. I'm also a certified public accountant and a chartered financial analyst. I've been investing in the markets for pretty much my entire adult career. And I think it's terrific that people your age are really interested in investing because it can seem really complicated on the surface, but actually it's pretty straightforward. So I'm going to share with you some slides I put together to walk you through investing. Okay. Hopefully you can see the screen. Okay, so the topic is investing as a minor. So what is investing? Investing is basically you're committing capital or money for a financial return, right? i.e., you want to make money. And we're not going to get into investing strategies. So I think those are for other sessions. But it's really important to understand that there's a big difference between investing and speculating. They are not the same. You've heard a lot about Robinhood and other platforms. You've heard about the Reddit stocks. You've heard about people trading derivatives and options. And again, that's speculating. And it's really can be very dangerous because there are very sophisticated traders in the market with PhD, with lots of technology and money behind them. And that's not really what we're going to be talking about today. We're going to be talking about the mechanics and the infrastructure around setting up, real investment accounts. So what is a minor? So basically, you need to be 18 years or older to have your own brokerage account, meaning an account that you control that's in your name. So if you're under 18, you essentially need a parent or a guardian to be involved, i.e., they need to open up the account for you or sponsor you. So despite the age limitations, there's still a lot of different choices for you to invest, right? And again, you're going to need a parent involved, but you've got a couple of choices. Generally, I'd say there are two really important dimensions or classifications for investing. So you can have a custodial account or a non-custodial account. There's two types of accounts. And then on top of that, one can be taxable or tax exempt. And so between those various choices, will determine what type of account you can set up. Now, just as I mentioned early on, as a minor, you can only invest through a custodial account. So a non-custodial account is only if you are not a minor, i.e. older than 18. So unfortunately, when it comes to that decision, you only have one choice right now. Secondly, with respect to a taxable or tax exempt account, you've probably heard of things like the Roth IRA, et cetera. You actually have to have earned income to invest in one of those tax exempt accounts, meaning you have to have earned taxable income. Otherwise, you cannot invest in those tax exempt types of accounts. Let's talk a little bit about what's in a custodial account. So as I mentioned, as a minor, you're going to need a parent or guardian to open an account. Really, there's just one or two types of taxable accounts, the UGMA and UTMA. People often use those two acronyms in the same sentence. Some states, such as Vermont, don't have UTMAs. Every state has a UGMA. The only principal difference is UTMA accounts allow you to have real estate in them, whereas UGMA accounts only have securities. But for the most part, for today's topic, they're really interchangeable, and the UGMA will give you everything you really need. Now, these are taxable custodial accounts. What that means is that when you turn of age, And it varies by state. So in some states it's 18, in some states it's 21. When you reach that age, that account will then revert back to you, and then you will have full control of it. So in the meantime, as a minor, your parents will have control even though it's in your name, right? So it reverts to you upon becoming a non-minor. As I mentioned, custodial accounts are really your only options for investing, right? Even in a tax exempt form. So let's spend a minute about tax exempt. So what are tax exempt accounts? Tax exempt accounts basically allow you to grow the account tax free. So for example, if you buy securities or stocks and they generate dividends in a taxable account, you or your parents have to pay tax on the dividend. If you buy and you sell stock at a gain, you have to pay tax on that gain. In tax exempt accounts, you don't have to pay tax. These are very popular in retirement accounts, but they have some restrictions, right? So unlike the taxable UGMA and UTMA accounts that basically allow you to buy and sell at will, take money out whenever you want, the tax-free accounts have restrictions. They have restrictions on how much money you can take out, what you can use it for. In addition, Roth IRAs, as an example of retirement accounts, require that you actually make money. You have taxable income. And that's not babysitting, getting $100 of cash. That is actually, a W-2 slip that your parents will have to use when they file their taxes. The last type of tax exempt account, which still falls under the realm of investing, are 529 plans. Some of you may have them that your parents have set up. These are really for college savings. They're really designed to pay tuition and room and board for college. And so they're not really retirement plans because you can't really use the money to retire off of. It's really used to pay schools, but it's still, again, a way to invest for the future. So that's in a nutshell the basics of investing as a minor. One thing we didn't really discuss is, how do you actually start doing this, right? Now, the easy answer is you go to your parents and say, hey, mom and dad, I'd love to set up an account. Can I have $500, $1,000? Typically, there's a minimum to set it up. But in lieu of that, if for some reason your guardian or your parents just are unwilling to really, go to the trouble of setting the account up for you, you can demonstrate your willingness, your commitment, and your desire to invest by, for example, setting up a shadow portfolio. So pick a bunch of stocks, track it, and then show your parents on a monthly, quarterly basis, how that portfolio has done, explain to them why you picked these stocks, and really just show them that you have this real desire and a commitment to learn about the markets. I will say that any investor will tell you that the power of compounding is an incredibly important tool when considering investing. And so the earlier you start, the better chance you will have to actually make money. So I'll pause now and open it up for some Q&A. Don't all speak at once. At Harvard Business School, they actually call people out. Is that, Patricia, should I start calling people out?
I think anyone, if you guys have any questions on anything Mr. O mentioned, or if you guys are more comfortable typing in the chat. That's perfect. Oh, I think we got one question.
Does investing hurt FAFSA? Ooh, that's a good question. Generally, unless you're talking about a lot of money, which we're probably not, it's not likely to impact FAFSA. If you're asking the question, does it impact FAFSA? Unless you've got a really rich uncle, it's unlikely, right? But I still encourage you to set it up even with a small amount just to get started and really learn about the markets. You know, investing is not just for finance people, it's for everyday people. You know, irrespective of what you think you're going to do with your life down the road, this is not just for finance people. What does your day-to-day job look like? So just to be clear, I'm an investor, but I invest in private equity. So private equity is actually a whole nother category falling under what we call alternative investments. So I do not actually buy and sell stocks, bonds, or securities in the markets. I used to trade securities, but now I'm in private equity. So my day-to-day job really is about buying companies. We buy whole companies, we fix them up. They're typically private companies, and then we sell them. So it's different than what you might think of as a traditional, say, mutual fund investor. What do you think is the best custodial brokerage account for teens? You know, there are a lot of good ones out there. I'd stick with the biggest names. Fidelity is launching a new product designed specifically for 17 and 18-year-olds, where it's sort of quasi-custodial, where you get more control over it. E-Trade is also super easy. Schwab, Vanguard. I would really stick with the bigger names, just because they've invested a lot in the technology. They all have apps for your phones. It's pretty easy, and chances are convincing your parent to set up, you know, a Vanguard, a Fidelity, or E-Trade brokerage account for you is going to be easier than asking them to set up, say, a Robinhood account, because obviously, you know, there's been a lot of controversy around that platform. Question: what do you think is the best kind of banking investing account to open? Well, look, they're all kind of the same. So when we talk about brokerage account, we're talking about an account where you can buy and sell basically listed securities. Listed securities are stocks and bonds that trade on the exchange, like the New York Exchange, Stock Exchange, or NASDAQ. There are a lot of other accounts that you've probably heard of, like, you know, savings accounts, retirement accounts, et cetera. But I would stick with just a basic UGMA, UTMA custodial brokerage account. Buy some stock, you know, watch it, put some stuff in it that you like, you know, because at your age, you're looking at a 20, 30, 50, 60-year horizon. And so you can afford to wait the market out, buy what you like and buy what you know, right? But make sure you do some research. Don't just start picking things out randomly. How do you find good investments? Oh my goodness. You know, look, that is the toughest part. I would say where most people tend to trend that really have an eye towards long-term investing are index funds. So when people talk about, say, the market or beating the market, they're typically referring to the S&P 500. So the S&P 500 are the 500 largest stocks, and that's the market. So when people talk about, I'm going to outperform, you have to outperform those 500 stocks in aggregate. Very difficult to do. And so in some ways, the easiest investment for you all to make would be to buy simply the S&P index. There are a lot of ways to do it. They're super inexpensive, really easy. The one that I like is called IVV. That's the ticker symbol. It's basically an S&P 500 ETF, an electronically traded fund. You can go in and out anytime you want. It's very liquid. And most importantly, the fees are really cheap, right? So fees are really important because these S&P 500 funds or market funds, index fund, ETF, all charge some kind of fee for somebody just to manage all the 500 stocks in that pool. So I would suggest starting there, and then maybe pick some single stocks. But look, finding good investments, that is not easy. It takes a lot of work. People spend 100 hours a week working in the office trying to find good investments. So I would caution you to think that it's easy. Start with the market and go from there. What stocks do I recommend? I'd start off again, like I said, the index fund. There are index funds for bonds, international stocks, small cap funds. The Russell 2000 is a mid cap index. So start with researching index funds, and maybe you can tilt your portfolio depending on where you think the macro is headed. Better to invest lump sum or buy fractionally over time? That's a good question. Market timing has always been a bit of a fool's errand. However, you're young enough that you can wait out the market. If you have a strong view that the market is going to get weak or the market is going to get hot, maybe that's a way to play it. Maybe you put $100 or $500 into your account and you put a quarter of it to work. See how that works. Put another quarter of it. But I think you're all young enough that you can kind of play around with it without taking on too much financial risk and doing too much financial harm, that you can use that as a way to really learn about the markets. What literacy do you recommend to educate ourselves about investing? Whew, man, that's a good question. I mean, there's so many good books about investing. I mean, you can just Google it. And, I'm not going to go through some of these investing books. There's Warren Buffett has a newsletter that he writes every year. They're incredibly informative. And if you have the inclination, I'd read his newsletters. They're posted online and they go back, I think 40 years, but they're great. The other thing that you're going to find really interesting, and it will really help you to understand these businesses, is reading their annual reports. They're very thick, they're lengthy, but they describe everything these businesses do. A lot of it will be foreign to you because it's a new language, so it's going to seem, Greek. But it's a great way to get immersed in some of the metrics and the terminology that the markets use. So I'd start with, Warren Buffett's newsletters, annual reports of companies that you like, and then look, there's no shortage of good investing books out there. What are the steps to investing? Well, first, setting up the account. Look, setting up the account, funding it with some money in itself is a bit of a process, right? Your guardian and your parents are going to have to do some paperwork. It's going to take time to link your funding account to the account. All of this is done online. But I'd say the first step is obviously getting permission and getting a parent to do this and actually setting it up. Once the account is set up, it's real, you've got money in there, then actually you're in a really good position. You're really in a good position because now you can actually think about, what do you want to do with the money, right? And there's so many options, it's infinite, but it's sort of an exciting part of the journey where you get to really think about what excites you, right? And maybe it's just you want to start off with the index funds, or maybe you want to go directly into single stocks and start stock picking, right? But I think the first step is getting it set up. The second step then is reading voraciously about everything. And what you're going to find is that, let's just say you decide you're going to put some single stocks in the market, into your portfolio, right? And let's just say you decide you're going to pick Alphabet, which is the parent company of Google. Guess what? The moment you buy Alphabet, you're going to start following the stock. Why? Because now you have a vested interest in that stock. And so just putting on a position in your account in itself is going to force you to really follow the stock, follow the market, and think about these issues. So that in itself is going to create, give you a reason why you should be following the market. How do you think about risk and diversification when investing? Great, that's a great question. Look, as I mentioned earlier, there's a reason why index funds are popular. Index funds are popular because that basically is the market, right? So when people talk about, what did the market do? It's the S&P 500, essentially, right? The Dow to a lesser extent, and then there are a bunch of sub indices and smaller indices like mid cap, as I mentioned, the Russell 2000. So when you buy the index, you're getting the market, meaning you are earning what the market earns by buying the index. You're not doing any better. You're not doing any worse. And so the question then for you is, by buying that one ETF, is that enough? So if you buy the S&P 500 ETF, that's 500 stocks. I mean, that in itself is pretty diversified. So now the question is for you, how much more risk do you want to take, right? So the question around risk and diversification is a very personal choice, right? So I'm going to pause there. I did a lot of talking. Patricia, should I keep going? What else do you want me to try and address?
I think these are great questions. Thank you guys, everyone, so much for answering these. But unfortunately, we are out of time as it is 7. But as I'm reading through these questions, a lot more on the logistics of like how to invest, tips and tricks, like anything like that, or other literacy resources. These can all be covered in our next 2 sessions, which is actually a perfect segue for like all these questions, like risk and diversification and everything like that will be covered in our session next week, next Monday at 6:30. But thank you guys so much for joining. That was an amazing session. And if you guys have any other questions, you can be sure to reach out to my email, which I'll put in the chat, and I'll forward them along. But thank you everyone for tuning in.
Bye, everybody.
Thank you.
Thank
Thank you.
Thank you.